exercise. So during the class, we're just going to discuss the answer for that exercise so that you can check your answer and then make a correction for that one. Yeah. So please prepare that one. Yeah. All the answer for the exercise together with for your tutorials case. Yeah. Okay, and then we're going to form a group. You're going to form a groups here because we have two projects. Okay, you need to have two projects. That project need to be submit in a groups here. So the group that you need to form here, so the names of the group member. Okay, just find your group member first. The name for the group member will be the next class. Okay, and then you select only 5 members in the group. Okay, this member for a purpose of this group is for a purpose of project 1 and project 2. We're going to have two projects for 4. Okay, you're going to work in a group for a project, and then please participate during our discussions. Okay, and also be available during class. So I'm going to call you sometimes, so make sure that you cannot see the screen, but you have this what you have now in your screen. Is it? Oh, nothing. Not the. I thought that you have this one, the attendance. You don't have this one for the attendance. Okay, all of you already scanned for the attendance, huh? Okay, now what you can see? Is it the attendance? Now it's already blank. This one, the attendance. So you cannot see the attendance. Blank also. Okay, I can see the attendance now. Okay, I just share with you this attendance. The one that I discussed before here is the rules here. Okay, now settle with the attendance. So means that the rules here is, I'll just list down a few rules regarding your WhatsApp group. So you need to join the WhatsApp group and then please participate during class, and also okay, prepare with your notes before class. So you just read the notes before class, because now I'm a little bit afraid here. Okay, because your 4 here quite a tough subject for 4, but now the times allocate for all the accounting subject actually is only 1.5 hour. So 1.5 hour, you're going to minus 10 minutes, means that you only have about how many minutes? 80 minutes only. Okay, we have so many calculations in 4. I'm afraid that we are short of time, so please make sure that you read the note before come to class or before you enter the class, and then make sure that during class you just want to know the details and only want to understand based on the notes that you already read. Okay, so that is what we have. Any questions that you have regarding the rules that we already discussed previously? Any problem that you have with that rules? Okay, I'm going to stop sharing your attendance. So now we're going to share with you the syllabus. How many of you has a syllabus with you? How many of you have a syllabus now with you? Now. Printed copy. You have only one. Only Najwa have. The rest, what about the rest? The rest is still rely on your computer. Okay, Adwa also have that one. Okay, please make sure that you have your syllabus with you. Okay, the syllabus is very important. It's going to guide you what we're going to learn for the next class, what you need to prepare for the next class. Okay, so this is the thing that you have for your syllabus here. You have a syllabus, so you can we're going to discuss your syllabus. For since this is the first class, we're going to discuss the syllabus, a little bit discussions on your syllabus, and then after that, if you have time, we're going to proceed with the notes on chapter 1. Yeah, okay, hopefully that you already have the notes for chapter 1. Yeah, because chapter 1 we have 2 parts. The first part, maybe we're going to proceed with the first part for today's class. Yeah, okay, so now I'm going to discuss on your syllabus here. So the syllabus here is the 4. Okay, financial accounting and reporting 4. Okay, and the prerequisite here is 4.3. 4.3 that you have for that you already have. This one for last semester. Yes, so I think that for the last semester we have about 300 students, 300 more, and 380 something. Only 1 or 2 that fail for this one, I think only one, because of the problem with the submissions of the coursework. Okay, so only one fail means that all of you now join for 4 class. Yeah? Okay, so the 4 class here, the things that we're going to focus for 4 class here is more on the consolidated financial statement. So when we talk about consolidated financial statements here, we're going to refer to the 4 statements that we have here, including the notes. Okay, we're going to focus on the statements of profit or loss and others comprehensive income, and then your statements of financial positions, and then one more thing that we're going to have here is a cash flow statement, and then the other one is equity, changes in equity. So we're going to focus on these 4 statements, but this time is a consolidated here. We're going to combine between parents and subsidiary. Okay, you're going to have a parent and subsidiary. If you remember that last time when you do a project, you need to refer to the annual report. For the annual report, you're going to have 2 informations. One is for a group and one is for a company. So the groups here is a prepare based on a consolidated financial statement. Once you have a relationship, combinations of information from parents and subsidiaries. So this is what we're going to have here. So the groups under the items group here is prepared based on the consolidated financial statement. That one is referred to the consolidated financial statement. For the company itself is only the financial statement for the company. Okay, the company only, but for a group is combinations of a parent and subsidiary. So when we talk about consolidated financial statement, we're going to look at the 2 elements or 2 parties that are involved here is a parent and subsidiary. Parents here is the one that own a shares in the subsidiary, so the amount of shares here should be more than 50%. To become a parent, they need to have a share which is more than 50%. So means that you're going to control the subsidiaries. Yeah? Okay, subsidiaries. And then we have a simple groups of company or a complex groups of a company. Simple group of a company, for example, here we only have parents and one subsidiary. That one is a simple. But when it comes to a complex here, you have more than one subsidiary. Parent have a subsidiary one, and then this subsidiary have another subsidiary, and then parents may have investment in others company, so this one become a complex. Yeah? So this one is a simple between parent and only one subsidiary, but it tend to be complex when you have more than one subsidiary. Okay, and then we're going to also study or discuss on the foreign subsidiaries. Yeah? Foreign subsidiaries here means that the parent, when they have a subsidiary, that subsidiary either in this country, let's say you are in Malaysia now, either the company is in Malaysia, or you may have a foreign subsidiary, or you may have a branch, okay, branch in KL, in Thailand or in Singapore. That one is considered as a foreign subsidiary. And then the other ones, you have associates here. You may have associates here is once you have your investment in that company is more than 20%. More than 20%, but it should be below than 50%. So this will between this amount, between 20% but less than 50%. So we call that one is a investment in associates. Yeah? So investment in associates here, you cannot control the company, but you may have a significant influence. Yeah? You may have a significant influence. Okay, you cannot control, but you may have only a significant influence. Okay, and then the other ones, you have a joint venture. Joint venture here means that you're going to have company A join together with a company B, and then they form a new company called a company C. So that one is a joint venture. They join all the asset that they have. A provides some asset, B provides some asset, and then they come up with a new company, which is a company C, and then they're going to operate together. That one is a joint venture. Okay, and then we also have direct and indirect holding. Direct holding, this is example of a direct holding. So, okay, direct here we only have parent to subsidiary. And then this is example of indirect holdings. So this is indirect holding. If you look at here, parents only have a share in a subsidiary 1. And then this subsidiary 1 have a share in subsidiary 2. Automatically parent also have a controls over subsidiary too. So it said that this is a indirect holdings. Okay. Then you're going to have the accounting for foreign currency. So once you have a branch outside Malaysia, then for the purpose of preparations consolidated financial statement, you need to translate the financial statements of the foreign current financial statement of a foreign subsidiary which is prepared in a foreign currency and then translate it to Malaysian ringgit. For examples here, you have a subsidiary in Singapore. Okay, the subsidiary in Singapore prepare their account financial statement based on Singapore dollar. So for the purpose of combination or for the purpose of consolidation, you need to translate from Singapore dollar to Malaysian ringgit. So we call that one is a translations of financial statements. Yes, so we're going to do that things also. Okay, and then we also going to prepare for a financial statement analysis based on the how we're going to value a company, valuations of a financial information. So valuations of the financial information here together with the financial statement analysis here will be your project. This one will be a project. Project. You're going to have two project, project 1 and project 2. Detail about project 1 and project 2 we're going to discuss after this. Okay, this is the synopsis of the course. Okay, course objective for what you have for the course objective here. Okay, so for the objective of this course here is to enhance, to enhance students' competency in preparing consolidated financial statements. With a consolidated, more complex group dealing with the associate, joint venture and also a foreign operations. Okay, and also we need to analyze the group financial statements. So the group financial statements here is referred to the consolidated financial statements. Okay, and then it also aimed to introduce advanced disclosure. Advanced disclosure is related to the operating segment, and then the other one is a related party. Operating segments here is segments that you have in a business. Either it's related with the geographicals, and then the other one is based on the business segment. Geographical, for example, you have a branch in Sintok, you have a branch in KL, you have a branch in Ipoh. So this one is based on the geographical. Or maybe you have a branch in Thailand. So this one is based on the geographical. And then for a business segments here, maybe your business segments here, you may have property development. Okay, you may have a transportation sections, and then you may have a plantation. For example, here is Sime Darby. Sime Darby may have a few business segment. They have a property development, they has transportation, then they has a plantation. This is a business segment. Geographical is related with the locations of the business. Okay, and then related party transactions here is we're going to look at once the transaction is doing between the persons that have a connection with the business. So that one is a related party transaction, so we need to disclose. This one is more on the disclosure. Operating segment and related party here is more on the disclosure, so this one is more on the theory parts. Okay, and then so the learning outcome. If you have anything to share or to discuss, you can interrupt me. Okay, just unmute your mic. Okay, so for course learning outcome here, okay, we're going to prepare a consolidated financial statement for a complex group structure. So complex here means that you're going to have more than one subsidiaries. Okay, we're going to focus on this one because it's only one P to one. This one is a simple one, so we're going to look at for more complex, yeah, which when you have more than one subsidiary. Okay, and then we're going to explain and present information that relate with the operating segment. So this one is only relate with a disclosure, disclosure about the operating segment, related party transaction, and also a foreign operations. Okay, and then we're going to analyze critically collaborative complex group structure statement and interpret the financial ratio. So this one is more on your project, yeah, project. This one, and then explain critically collaborative current development of ISB or MASB. So this one is also another project. So this one will be project 2, this one will be project 1. Project 1 here is related with the standard. Project 2 here is about the analysis of the financial statements of the company. Yeah? So we're going to have two projects. Project 1 relate with the standard. Project 2 here is to analyze the company financial statements. Yeah? Okay, so that is what you have for the learning outcome. Yeah. Okay, so this is the contents here. If you look at here, we have a group account will be chapter 1. So for the group account, we have uh, a lot of things to discuss here, but the time allocated here is only 5 hours. And then you're going to have a basic, that one is introduction. Complex group structures here is one you have more than one subsidiary, and then you also have indirect interest. Joint arrangement, like I mentioned previously, either you joint operation or you joint venture. Okay, and then you have investment in associates here when your shares here is more than 20 but below than 50%. Yeah? Okay, so you're going to have that one. But for a subsidiary, once you have the subsidiaries here, when you control the company here, your share should be more than 50%. Yeah? Then we said that we have a control. For associates here, we only have an influence. We cannot control the company. Yeah? And then we're going to look at the disclosure. Disclosure here is referred to the standard on how to disclose your investment in subsidiary, investment in joint venture or joint operation, and then investment in associate. This one is more on the disclosure. Disclosure of interest here. Interest here means that disclosure of your investment. How you going to disclose your investment in the subsidiaries. Okay, why subsidiaries? I don't know what happened here. Subsidiary, associates, and also joint associates and also joint ventures. Okay. Then the next one, the next topic, we're going to have intercompany transaction. Okay, start from topic 2, then we're going to have more calculations here. So intercompany transactions here is once the parents do a transaction with a subsidiary or transaction with the associates or with the JV, yeah, joint arrangement. Yeah. So either one, parents sells goods to subsidiary, to associate, or to the joint arrangement, or it can be the other way. Okay, subsidiary source good do a transaction with the parents. Yeah, it can be the other ones. Yeah. Okay, either parents to subsidiary or subsidiary to the parents. So this one we call as a intercompany transaction. So this intercompany transaction need to be eliminated. Okay, why? Because you will need to prepare a group account, because we assume that parents and subsidiary and associate is a one company. Yeah? So we need to eliminate, especially the transactions between parent and subsidiary. We have to eliminate because parent and subsidiary here is a single entity. Then we're going to prepare a group's account or consolidated financial statement. So we need to eliminate any transactions that are occur between parent and subsidiaries. Okay. Then we're going to have a changes in the group structure. So changes in the group structures here, this one is more complex. This time you already have the investments in your subsidiary, and then maybe after that you want to dispose it. Okay, you want, or you may acquire, okay, acquired an additional share. So this one called as a changes. Okay, changes here because of the acquisition or because of the disposal. So okay, this one is start with a complicated things. So if you look at here, time that we allocate for chapter 3 here is 10 hours. Yeah, so many things that we need to do in chapter 3. Yeah, okay, so please, you start to pay more attention starting from chapter 2 onwards. Yeah? And then for chapter 4, we're going to have consolidated statements of cash flow. Okay, so this one is to prepare the statements of cash flow. Okay, so this one is consolidated. I am not sure whether you already go through the preparation of cash flow statement. I think that there is a little bit theory that you have last time in your 4.1. To prepare it properly, I don't think you have this one. You already prepare. Have you prepared the statement of cash flow in any 4.3? There is no for cash flow in 4.3. What about 4.1 and 4.2? Is there any preparations that teach you on how to prepare the statement of cash flow? Any of you? Are you still there? Okay, 4.1. You still have 4.1. 4.1 here, they introduce you only the theory or prepare it, the statements itself. Theory, I mean that the elements of the financial statement. Have they introduced that one? Preparations or only the theory? Which one that they introduce you? Prepare and a theory, both. So you know what is a cash flow statement. The same cash flow statement, but this time we're going to come more complicated here as compared to 4.1 here, because this one is consolidated, means that going to combine parents financial cash flow together with subsidiaries cash flows. Yeah, going to prepare that one both. Yeah? Okay, and then after cash flow statement, okay, we have two methods here, either we are using the direct or indirect methods. So, and then the other ones that we have here is a foreign operations. Yeah? So foreign operations here is once you have the subsidiaries. Let's say your subsidiary here is in Singapore. Okay, your subsidiary here is in Singapore. Okay, so the Singapore subsidiary prepare a financial statement in a Singapore dollar. Okay, they prepare in a Singapore dollar. So once you want to prepare a consolidated financial statement, you need to translate it to Malaysian ringgit. Yeah, you need to translate that one to Malaysian ringgit. Yeah, so this one we call as a foreign operations, translations of foreign currency. So once you translate from Singapore dollar to Malaysian ringgit, then you're going to have either gain or loss, because this one, when your exchange rate, foreign exchange rate, is going to deal with a loss or gains. Yeah? So you need to account for this gain or loss. How are we going to account for the gain or loss on the foreign exchange? Yeah? Okay, and then after that you have operating segments. So like mentioned previously, operating segments here, either geographicals or business segment. This one is more on theory. Yeah? This one is more on theory. Okay, and then the next one, earning per shares. Earning per shares here is calculation. Okay, this topic is a little bit simple here because it's dependence. It's not related with this one. Okay, so you're going to know how to calculate the earning per shares. Yeah? Earning per shares. And then the last topic that we have here is a related party disclosure. More on the disclosure, so means that this one is more on theory. Chapter 6 and chapter 8 is more on theory. Yeah? Because if you look at the time allocated here is only 2 hours. Yeah? So starting from chapter 1 until chapter 5, they are related. Okay. So please make sure that you understand every chapter at the beginning, okay, especially chapter 3 and 2, very complicated here. Okay, and then we're going to have a comprehensive case. Okay, for comprehensive case here, you're going to look at the share-based payments. Yeah? Okay, we're going to focus. There are a few items, but the thing that we're going to focus here is on a share-based payment. This one will be your project 1. Yeah? Okay, details about the projects you're going to discuss later, project 1. Okay, so you're going to have here is a share-based payment will be a project 1, which contribute 15%. And then the other chapter 9 and chapter 10 is a project. So another one you have a corporate valuation. This one is for project 2. So corporate valuations here on how we're going to prepare, on how we're going to value the company. So you need to refer back to your 4.3 notes here, 4.3 note, which is in a chapter of fair value chapters. You have on how to value the company based on the market approach. If you still remember, income approach, and then you're going to have a net asset. So you're going to use this approach to value the company. So we're going to, this one will be your second project. Yeah, so means that you cannot throw away your notes for 4.3 last semester. We still want to use that notes, yeah, to value your company. So this one for your project, we're going to use this one for your project. Yeah, okay. So the main reference that we are using for here is the Tan Leong Tong. Okay, this is a consolidated financial statement. And then the other one is an joint. This is the most popular reference that we use for the consolidated financial statement. Yeah, we're using an joint, we're using the Tan Leong Tong, because both of this company is prepared based on the MFRS. Yeah, so using Malaysian's environments. Yeah? So you may use the others reference also, but most of the time we are referring to these two. Okay. So the last part is about this one, Act and regulation that we use is Malaysian Company Act and also the must be standard. Okay, teaching methods same as other course. We are using a lectures, tutorials, discussions, and also a project. Yeah. Okay, course assessment. So you need to, okay, be careful with this one. I missed one items here. So the things that we have here. So for the course assessments, you have a coursework. Courseworks here we cover 50%. So from your courseworks here, you have a mid-sum of 10%, tutorial 6%. If you look at here, you have two things here, tutorials and mini case. So tutorials here is exercise that we provide for each of the chapter. Okay, and then you need to submit each of chapters, topics. Okay, so you're going to have altogether 8 topic, but for topics that we have here, the one that you have for tutorial is only topic 2, 4, I can't remember. I think that you have 2, 3, 4, 5, 6, no, 7, 6 and 8 will be combined. 6 and 8 will be combined together. Okay, so each topic going to have a tutorial, so going to contribute 6 marks. It's like your mini case last time, for 4.3, but in this 4.4 we also have a mini case, but this mini case here is a combination, a question that a combination more than one topic, maybe topic 6 plus topic 7 for a mini case 1. So for mini case, you're going to have 2 mini case, 1 and 2. Each of them will contribute 2%. Okay, for tutorial, we have 6 topics here, 6%. Okay, and then you have a case project 1. So project 1 that you have here, so for project 1 that mentions to you here is about the share-based payment. Share-based payment in topic 9. Okay, and then we miss one project, another project, case project 2. Suppose that we have case project 2. Okay, for case project 2 here will be based on the company valuations. Okay, so we're going to have another 15%. Okay, so you total up here all together that you're going to have here. If you total up to this one, it's only 35. So I miss one project, say case project 2, another 15%. So altogether will be 50%. And then you're going to have a final assessments. Okay, for final assessment, you're going to have 2 final assessment, but topic for assessment 1 is not yet decided, but I think that okay, for final assessment 1 will be topic 3 and topic 4. Final assessment 2 will be topic 5 until topic 8. Okay. So this is what, but details about final assessments here I'm going to inform you. Okay, but please make sure that you already book the dates here. We already decide that your midsum will be on 27th of April, and then the time here will be at 2. Final assessment 1 will be on 25th of May. also 2 until 6. But this one for mid-sem not yet decide the time, yeah. But we're going to start at 2 and the time is not yet decided. We're going to end maybe up to 3 hours or 2 hours. It depends on the question because we not yet prepared the questions. Okay, for final assessment 1, we're going to have for 4 hours starting from 2 until 6. The same thing for final assessment 2, which on 15th of June, yeah? Okay, 2 until 6 also. Okay. And then the last part that we have here, attendance. So you know the attendance should be 80%. Okay, and then the other one is about the ethical behavior. So every time you want to submit for your mid-sem together with your final assessment, you need to fill up your pledge form. Okay, so the things. Okay, I think that we end your discussions on your syllabus here. So anything that you want to ask or anything that you want to share regarding your syllabus here, or any questions that you have here? Any of you have a question here? I'm not alone here. I think some of you are still there. Okay. So any questions? I'm waiting for your question. We have 37 now. Okay, 37. Since that we're going to have 5 members in a group, so means that maybe one group or two group are going to have 4 members only. Yeah? Okay. Any questions that you have while waiting for? Okay. Any questions? Please, yeah. Do you have any questions? Remember that you need to participate during class, and then you're going to stay until the end of the class. So what you have? Any no question back? Okay. I know also no questions, so you understand about the syllabus. Okay, no question. Please make sure that there is no exam during the day. If you have a problem, please check. If you have any exam during that time, the date that we already allocate here, 27, 25th, and 15th. Do you have any exam during that time or during that date? You don't have a class, isn't it, on Tuesday? Any of you have a class on Tuesday? Maybe ICS class? Any of you?
No, doctor.
No, no class. Okay. You don't enroll for the ICS yet. Integrated case study. Any of you enroll for that class for this semester? No. Okay, so no class means that you are free during that time, should be okay. Your exam at 2 until 4, until 6, 4 hours, sorry, 4 hours. That one, yeah. Some of your friends in the previous group said that they have a quiz for those who enroll for tax class BK803033. Any of you?
Yes, doctor. Ada quiz.
You only have a quiz in the morning, isn't it?
Not sure lagi.
Not sure yet.
Tapi that day lah.
Ah,
25.
because they mentioned that the exam, the quiz will be on starting from 9 until 10, so means that the afternoon you'll be free. Okay, mid-sem will cover how many topics? Okay, mid-sem here. If you look at here, topic 3, final assessment 1 will be topic 3 until topic 4. Final assessment 2, 5 until 8. So means that your mid-sem here will be topic 1 until topic 2. Okay. I haven't looked at not yet not yet finalize the questions for mid-sem. Once finalized, I'm going to inform you. I think that this one is only topic 1 and topic 2. Okay. Okay, topic 1 and topic 2, we'll have about 10 hours to cover for topic 1 and topic 2. Okay, so other questions regarding your syllabus here? Okay, so your project details about the project guideline, once ready, I'm going to upload in your online. Then we take some times, maybe half an hour or 50 minutes to discuss on that one. Yeah. Okay, we plan to give you questions earlier so that you can prepare for that project. Yeah, not to wait until the end of the semester, because at the end of the semester you're going to have more exam, more project to submit. Not only for 4 you have another class that you enroll also need to submit some project or anything, exam maybe. Okay, so please we give you earlier the project 1, the question for project 1, project 2. You can try to search for the information, try to prepare for that one. Yeah, okay, find for the information. Okay, please form a group of 5. Yeah, only 5, but since you have 37 here, we have extra 2 members here. Okay, we wait until the end of this week. When will be your last date for add and drop sessions? When will be your last date for add and drop? Any of you? Until this Thursday. Okay, so until this Thursday still at drop sessions. So next week, next week, Monday next week, make sure that we're going to check how many of you, then you can start form a groups. If that one is still 37, means that maybe once or 2 groups going to have, because we said that maximum is five members, maybe 1 or 2 groups or 3 groups going to have 4 members in a group, not instead of 5 years. Okay, we're going to see what will be the final figures or the final students number for until this coming Thursday. Okay, so next week you can decide how many members in a group, but maximum is 5. Okay. Okay, any of you want to drop from this class? You feel free until Thursday, isn't it? Any of you plan to drop from this class?
No, doctor.
So you have to go through your 4 isn't it? Is that this semester? Okay. So you don't have a choice. Uh, or you want to change to another groups. Okay, still have time for that one. Okay, so how much would you rate the difficulties in 4 from 1 to 10? Okay, so which one? 10 is being the hardest, or you already give me the skills here. 10 will be the hardest. Okay, let me ask you about 4-3 last time. How you rate that one? 1 until 10. Oui? How you rate that one? 8. Okay, so you said that for 4, sorry, 4-3 is 8. Okay, if that one is 8, and then many of you can score A for 4-3 last semester. I can say that the 4-4 is 8.5. Is it okay? Okay, 4-4, even though we have topic 1, topic that are difficult here is topic 3. Actually, topic 3, because topic 3 is you need to know a complex structure. When it comes to topic 4, topic 2 is only how going to do the elimination between the transaction between group. Topic 2, okay, you can go with it. Okay, you can understand topic 2. Topic 3 become complicated here because we have more than one subsidiary and then we have indirect shareholdings. That one be complicated. But when it comes to topic 4, topic 5, even though it's still consolidated, it's a little, less complex as compared to topic 3. The most hardest one that I can say here is a topic 3. Okay, topic 4, topic 5, it's a relaxed one. The student can score for topic 4 and topic 5. Topic 6, 7, and 8 also they can score. But a problem here is a little bit on topic 3. The rest is okay except for topic 3. So it means that you need to, but to understand topic 3, you need to know topic 2 because topic 2 is related with topic 3. So what I'm suggest to you here, please make sure that you understand topic 2 and topic 3. Okay, Then topic 4, 5 onwards will be easy for you. Okay. Okay, you don't have to worry that for 4 it's not just it's not really a tough, because last 2 semester 192. Okay, I teach for 4 for that semester. 12 of my students got A for 4. It means that it's not hard. It's not a hard topic or hard subject. Okay, it's not so difficult. So you can go through on that one. Okay, your 4-3 is A, so it's okay. For 4 can also get A for 4-4. Okay, the rest, any other questions that you have? I'm uh, I'm really happy if you can voice out instead of put it in the chat box, so that I can hear your voice, so I feel that I'm not only alone here talking to my computers here. So is it better for you? Is it okay if you have something? Can you just voice out? Okay. If you have any questions or anything, okay. Because if that one is a chatting, it takes time. Sometimes maybe I miss some of the chat. But what do you have in the chat box? Okay. Anything else that you want to share here? Okay. Anything? Nothing else. So clear with your um syllabus here? Okay, so we're going to stop sharing this one. Okay. Just a little bit introductions. You have a note with you now? Do you have a notes? How many of you have a notes and a syllabus with you now? Okay, you already have the note. Some of you have the notes. So if some of you already have the notes, okay, can we just look at a little bits only on the topic 1? Yeah? Topic 1, you have, maybe we're going to look at the basics group structures. Just introduce you a little bit on the group's accounts. Okay, so this is what you have for the topic 1 here. Okay, for topics 1, if you have many things that you have in the topics 1, okay, part 1, part 2. Okay, so if you look at here, we have about 70 slides altogether for topic 1, yeah, the one that I provide you. Okay, so for a basic group structures here, we're going to look at the concept of the group account. Okay, we just proceed with this note. Only introduce a little bits only. Okay, we're going to proceed with the basic group structure. For a basic of group structure, we're going to look at the concept of the group accounts. May I my pencil? Okay, the principle of combinations and consolidated financial statements. So we're going to focus on the consolidated financial statement. Consolidations at the dates of the acquisition. So consolidation at the date of acquisition here means that you have a controls at the acquisition date. Means that when you bought a share here, when the parents bought a share here, the parents already bought a share which is more than 50%. Means that they have automatic controls over the subsidiaries. Okay, the complex group structures here is when you have a multiple subsidiary. Okay, parents will have subsidiary 1, subsidiary 2, subsidiary 3, so multiple subsidiary. And then the other one here we have indirect interest. Indirect interest here is parent to subsidiary 1, and then subsidiary 1 has a control over subsidiary 2. So we said that indirectly parent also can control subsidiary 2. So this one is a indirect interest. So this one is a multiples. When you have more than one subsidiary, is a multiple. This one is considered as a indirect. Yeah. Okay, and then the complex here is when we have a combinations of direct and indirect interest. And then the cross holding is more complicated, but we only want to know about this one. We don't have some sorts of exercise for this one. So maybe we're going to go up to this one. This one is only to show you the theories that you have. Okay, for the complex group structure, so the complex here we have 4 category. Either that one is using a multiple subsidiary, indirect interest, like the one that we have here, direct combinations and direct and indirect interest, and then the other one we have a cross holding. Later on we look at what is a cross holding. This one is more complicated for the cross holdings. Yeah? Okay, so that is the first thing that we have here. So the outcome for this chapters here, we're going to explain the concept of business combination. So business combinations here is we refer to the MFRS 3 relate with the business combination. Combinations here means that when the parents own shares in a subsidiary. Yeah? Okay, we're going to explain also the concept of power. Powers here is refer to the voting power. Voting power. Voting powers here is referred to when you have shares. It's going to be determined based on the shares. Yeah? Okay, based on the number of shares that you have. Okay, so if you have more than 15% of shares in the company, so it said that you have a power, and also you have a control. Controls here and the powers is a difference. Here, power is a voting power. How many shares that you have here in the company, how many percent. The controls here is once you have the share more than 50%, then it said that you have a controls over the company. Yeah? So relate with MFRS 10, and FRS 10 here is relate with a consolidated financial statement. So means that when you have over controls over the company, you need to prepare a consolidated financial statement. MFRS 11 here is relate with the joint arrangement. Yeah, joint arrangement, which is referred to the joint venture and then joint operation. Okay, we're going to learn about this one later. And then MFRS 1 to 8. Okay, 1 to 8 here is investment in associate. So associates here means that you have a share between 20 to 50%. So this one is a investment in associate. So the standard that we're going to look at here is 4 standard. 3 here is for the combination, business combination. So under business combinations, we're going to have a consolidated financial statement when you are talking about the relationship between parent and subsidiary. And 11 here is related with the joint arrangement. Either you have joint venture or joint operation. And then 1 to 8 here is related with the investment in the associate when we have a share more than 20% but less than 50%. So, okay. I'll put it a little bit there. Okay. So if you have anything, any question, just voice out. Maybe I missed the one that you have in the chat box, because that chat box will block the slide that we have here. Okay, and then we have to explain the definitions of the subsidiaries, joint arrangement, and associate, which refer to the standard at 10, 11, and 1 to 8. And then we're able to differentiate the accounting treatment for each of the entities. So there is a difference accounting treatment for the subsidiaries, joint arrangement, and also associates. Yeah, we are going to have a few accounting treatment. Either we're going to have the cost methods, equity methods. Okay, cost or equity methods, yes, will be a little bit different. Depends on type of your investment. Either that one is a subsidiary, associates, or joint ventures. Yeah? Okay, so the one that you have here, so the next one going to have here. Okay, so for the introductions here, the first one we need to define what is a business combination. So business combination here is a transaction or others event in which the acquirer, so now we're going to introduce you a new words here, acquirer obtain controls of one or more business. Who is the acquirers here? The acquirers here is a parent, then the acquirees here is a subsidiary. So acquirer obtain control. So our controls here, when you have share more than 50%, then it said that you have a controls over the company. So we're going to have at least two parties here, parents and subsidiary. Parent is the acquirer, subsidiary is the acquirees. Okay, this one is control of one, parent and subsidiary only. And then control of more business is parent with more than one subsidiary. Okay. So then for if you have a business combination, then we need to consider that one as a group. So groups here is a combinations of a parent and subsidiaries. So business combinations here, when the acquirer obtain control of one or more business. So acquirers here is a parents, acquirees here maybe one subsidiary or more than one subsidiaries. Okay. So the acquirer or the parents may obtain control of the acquirees in a variety of ways. For example, here is by transferring cash. Okay, you provide cash or cash equivalent or other assets to buy that company, the shares of that company, or by incurs a liability, provide them with a loan by issuing the equity interest. Okay, give them the buy the company by using the equity, and then providing more than one types of consideration, either A, B, and C's that we have here, either one combinations of A, B, and C, or without transferring consideration, but only with a contract. Okay, so D here is combination, either you are using the cash or you issue some shares or incur a liability, but for E here is only a contract. Yeah, so this is the way on how the parents can acquire a subsidiary through transferring cash, okay, incur a liability, issue an equity, or provide more than one type of condition, means that combinations of A, B, and C. Yeah, and then the last one is through a contract. Yeah? Okay, so please change this one, not Malaysian's Company Bill, but change this one to Malaysian's Company Act. Okay, this one bill is the US word we are using, not using bill, we are using the act. Okay, the framework, regulatory framework that we have for consolidated financial statements here, we're going to refer to the Malaysian's Company Act, okay, 2016, which is related with a second schedule requirement and second schedule assumptions. Okay, and then the standards that we have here is a business combination, MFRS 3, and then we have 10 here is for consolidated financial statement. 12 here is about the disclosure of interest in others entity, how you disclose your investments here. Okay, how the account parents going to the enclose their investment. So investments here is either investment in subsidiary, investment in a joint ventures, sorry, not joint venture, joint arrangement, because you have both, joint venture and joint operation. And then the last one is investment in associate. This is about the disclosure, how you're going to disclose your investments here in the notes to the account. And then for 1 to 7 here, 1 to 7 here is related with a separate financial statement. Separate financial statement is a statement that prepared by a company. Yeah? Okay, so if you look at the annual report last time, you have a group and then you have a company. So for a separate financial statement is a statements that are prepared by a company. They prepare a separate financial statement. That one is dealing with 1 to 7. Yeah? Okay. So this is what you have for the summary that we have here. So 1 to 7 here, IAS 27 is one, IAS when we convert to Malaysian standard, it become MFRS 1 to 7. Yeah. So separate financial statement, presenting separate financial statement for the investor. 1 to 8 here is investment in associate. So we're going to look at the accounting for associate. We are using the equity method. Okay, for 1 to MFRS 3 here is a define what is a business combination, how we're going to recognize it and then measure it. Okay, we're going to measure the goodwill. Okay, NCI. NCI here is non-controlling interest, identifiable asset and liability. Okay, so for a business combination, let's say you have a parent and then you have a subsidiary. Okay, parents should control more than 50% in the subsidiary. Okay, so let's say the parents control 80%. So 80%, so they're going to have a subsidiary. So means that they have another 20%. This another 20% is controlled by, now we call this one as a non-controlling interest. The old terms, last time they used the terms for minority interest. Okay. sometimes we call a minority interest, but now most of the time we are using a non-controlling interest. So parent is a controlling, yeah, parents controlling. Parent control only 80% from the shares of the company. Let's say they have a number of share of 10,000, 100,000. So parents control 80,000 shares. Another 20,000 is controlled by NCI or minority interest. We call it this one non-controlling interest. Yeah? Okay, and then to prepare a IAS consolidated financial statement, we're going to refer to MFRS 10. Okay, it's related with a control. Control means that you should have a shares more than 50%, then you can prepare a consolidated financial statement. So we're going to have here procedures. You need to know all the procedure how to prepare a consolidated financial statement, and then what type of investment entity that you have. Okay, and then for the MFRS 11 here is related with the 11 here is related with a joint arrangement. Yeah? Joint arrangement, you have two types here, joint venture and joint operation. And then for 12 here is about the disclosure, how we're going to disclose your investments here. Okay, either that one is investment in subsidiary, investment in a joint venture or joint operation, and then either that one is investment in associates. Yeah? So this is what the standards that we'll deal with here. Okay. So the things that we have here for a separate financial statement, refer to the MFRS 1 to 7 here. This standard shall be applied in the accounting for investment in subsidiary, joint ventures, and associate when an entity alike or required by a local regulation to present a separate financial statement. Yeah? Okay, separate financial statement should be prepared in accordance with all applicable MFRS standards, yeah, except for provided in the paragraph 10. Yeah? So this is what I mentioned by paragraph 10. Yeah? When the entity prepare a separate financial statement, it should account for investment in subsidiary, joint venture, and associate either at cost or in accordance to MFRS 9 when this is related with a financial instrument. So financial instrument should be value at fair value or using the equity method if that one is investment in associates. Okay, this one is investment in associate. So method that we are using here to account for your investments here, either we are using the cost method, the value of your investment either at a cost or either at a fair value if that one is related with a financial instrument, or using the equity method if that one is a investment in associates. Okay, this is illustrations of how they're going to prepare a consolidated financial statement. Okay, this is a group. Groups here is means that parent plus subsidiary. So they're going to list down all the asset that they have here. Okay, and then for the company itself, then they're going to have the investment. They're going to list the investment, how much the investment in subsidiary, how much the investment in a joint venture, and then how much the investment in associate. Okay, this one will appear in the company section. This one under the company sections here. Okay, if you look at here, this one is under the company section. So the company section here is considered as a separate financial statement. Okay, so in the separate financial statement, they're going to give a value on all the investment that they have by the parents. Yeah, they have investment in associate, investment in joint venture, investment in subsidiaries, and others investments. Yeah, so this is okay. But when it comes to groups here, since the parents has a control over a subsidiary, there will be no investment in subsidiary reported under group section because they already combined. Yeah, they already combined, become an investment. They already combined, put it under group. So there is combine, and then means that they're going to eliminate. Yeah, eliminate. So if you look at here, when you prepare the account for the group, there will be no investment for subsidiaries. Yeah? Okay, because we already combine, consolidate between parent and subsidiary. The other asset, we still have that one. Yeah? Okay. So this is what we call a separate financial statement. So separate financial statement, the company itself will report how much the investment in subsidiary, joint ventures or joint operation, and also the investment in associate. But for the purpose of groups here, there will be no investment for subsidiary. No investment for subsidiary. We only cater for investment in joint venture and then investment in associate. Why this one becomes zeros here? Because the investment in subsidiary is already eliminated and they will already combine and prepare that one based on a consolidated financial statements. Okay, so you understand this one, what I mean by a separate here. In a separate financial statement, we have information about investment in subsidiary. But for the group itself, there will be no investment in subsidiary because we need to eliminate because it considered as a intra-group transactions. Okay. Okay, still under regulatory framework. So the Company Act 2016 require every holding company to annex. To annex here is to produce a consolidated profit or loss account. Okay, and consolidated balance sheets to its balance sheet. So the parents need to prepare consolidated income statement and also consolidated segments of financial positions. Okay, based on a parent and subsidiary relationship. So means that you need to combine the informations from parents and subsidiaries. Okay, and then the assumptions that we have here, requirements here is the standards only. You refer to clause 250, section 244. 250 relate with consolidated. Okay, 244 here, standard, dealing with the standard. 248 here is presentations. You need to present a financial statement in the AGM. 247 here is financial year of subsidiary must coincide with the financial years of the holding company. So let's say that parent financial year end here is on 31st December. The subsidiaries here should have the financial year end also 31st December. They cannot have a financial year end other than that date, let's say 30th of September. You cannot have this one. So it means that parent financial year end or subsidiary financial year end should be the same as a parent's financial year end. Yeah? They must. Okay, so can we just finish with this one? Another two more slide, yeah? So this one is about the interaction, nothing much. Okay, if you have a controls alone, so the controls alone here means that you have a shares more than 50%, then you need to comply with the MFRS 10. MFRS 10 here is related with a consolidated financial statement and then together deal with the disclosure. This one is only a disclosure, okay? And then if you don't have a control, okay, you need to check whether you have the joint control. So the joint control, if you have the joint controls here, you need to define the type of joint arrangement here, whether that one is a joint operation or joint venture. If there is no control, not a joint control, it can have a significant influence. For a significant influence is going to account based on the 128. 128 here is investment in associates. Yeah? Okay, and then if there is no significant influence, then you need to deal with the MFRS 9 if this one is a financial instrument. Yeah? Okay, for details about the joint arrangement associates here will be in part 2 of your notes here. So we're going to discuss. This one is only the standard that we're going to use here. So if that one is a control, then you're going to deal with one MFRS 10. If that one is a joint control, then you're going to deal with MFRS 11. If that one is only a significant influence here is when you have a share more than 20%. So you're going to account using the associate. And then if you look at here, whatever types of business that you have here, you need to follow the disclosure, which is based on the standard or 12. Yeah? All this one has the same disclosure. This one, but for the financial instrument, there has a specific disclosure. They rely on the MFRS 7 and 13. This one is discussed in your 4.3 last time, yeah? Financial instruments, yeah? About this one. Okay, just go for the last one. Okay, last one here is about the Like, see, we want to finish with the regulatory frameworks here. Okay, so parent should prepare a consolidated financial statements. Okay, parent is defined as entity that has one or more entity. Subsidiary is an entity that is controlled by another entity. So this is what we have for a consolidation. So for consolidations here, you're going to have two party, at least two party here, between parent and subsidiary. So parents going to prepare a consolidated financial statement plus subsidiary. Sometimes maybe we have more than one subsidiaries. Yeah? Okay, so this is what we have here. So the things that we have here, I'm not going to continue with the next one. So the next one, we're going to look at the basic parent subsidiary structures. Yeah? Okay, and then we're going to look at the examples. Yeah? Okay, so I think I'm going to stop up to this one. Okay, any questions that you have here? Do you have any questions here? Any of you have a question? So please, when come to the next class, we're going to start with slide 13, about the relationship between parent and subsidiary. We still have a theory until slide 35. Okay, so starting from 36 onward, then we're going to have calculations. Yeah, so please read the notes, because maybe we just go through on surface only for the theory part. We're going to focus more when we have calculations items. Yeah? Starting from, okay, any questions that you have here? So I just stop sharing your PowerPoint here. If any of you still not scan for your attendance, okay, scan for this one. Okay, so if you do not have any questions, okay, if you want to leave the meeting now, you can leave the meeting. Or if you still want to ask anything, I'm still be around until 10:30. Okay, any of you have a questions?